Good evening, everyone. I'm Vaishnavi Vaidhi from Kirin Advisors. Welcome to the Rights Issue Virtual Roadshow of Remedium Lifecare Limited. Today, we will provide a brief overview of the company and its innovative business model. Remedium is engaged in trading and distribution of raw materials as supply chain management for the pharmaceutical industry, offering a wide range of pharmaceutical intermediates and components, all intermediates, raw materials, solvents, and CDMO products. All products comply with Indian and international pharmacopoeia standards with a focus on timely and reliable delivery. Remedium Lifecare has built strong long-term relationships with clients, securing repeat business and attracting new ones. From management team, we have Mr. Adarsh Munjal, full-time director. Good evening, sir. Welcome.
Good evening. Thank you so much for introducing the company.
We also have Mr. Ashish Parkar, Chief Financial Officer.
Good
Good
evening.
evening. Welcome. Now I hand over to Adarsh sir to give a short intro and journey of the company. Over to you, sir. Thank you.
Sure. Am I audible? Am I clearly audible before I begin?
Yes, sir. Yes, sir. You.
Great. So Remedium was founded in 1988, and Remedium Lifecare Limited is a BSE listed company. It's a pharmaceutical company that has been engaged in the supply of active pharmaceutical ingredients known as APIs, intermediates, and specialty chemicals. With an emphasis on quality and compliance and global reach, the company continues to expand its presence while playing a pivotal role in India's pharmaceutical ecosystem. We are very confident in our experienced leadership with a strong promoter and a professional management team is the secret behind the driving force of our strategic growth. Let's quickly dive into a presentation which will explain more about the company.
Yes, sir. Let's start with the presentation.
Great. Thank you. Thank you so much. So Remedium, like I already mentioned, is a company which is engaged in trading and distribution of raw materials. We are basically the partners for supply chain management of various pharmaceutical giants and companies who make retail products. We are primarily a B2B company, not a B2C company. We offer a wide range of intermediates and components, and all these intermediates are supplied as raw material. Currently, we are focusing on CDMO as a newer business model. CDMO is basically a model where we take up the entire project on a contractual basis, which involves initiation, manufacturing, and then distribution as well. So it's something that basically involves strategic as well as investment as well as executive decisions. So CDMO stands for Contract Development and Manufacturing Operations, which is basically a short form for contracts that companies like Remedium is now taking up with various pharmaceutical companies and handling their supply chain. So our key features are a really strong supply chain in the country as well as globally. We have some new global clients across the UK, Hong Kong, and a few in UAE as well. We are hoping to target newer clients globally in European countries and hopefully in the States as well. Our timely delivery and commitment is actually what has always been the crucial benefit for clients, and that is what keeps them coming back to us for more. Our closures for the previous fiscal years have been mentioned in the presentation. Uh, if there are any more questions about financial, I also have our CFO, Mr. Ashish Parkar, on the call. Next, please. So, like I already mentioned, we are primarily a supply chain management. We are not the guys who are manufacturing these products, but that doesn't mean we will not do the R&D and not really find the machines which will help our clients make the products. So our job is to actually, like I said, take up contractual, businesses which involve probably R&D, which is research, and then maybe manufacturing that, and then finally supplying it. And this is all done for the benefit of the client and also at the expense of the client. Having said that, CDMO, which is slightly different, previously we were just into trading, or rather, let's say, supplying pharmaceutical products and raw materials. So, taking it from one vendor globally or internationally or even domestically. So, we have a few vendors in India, most of them are in India, and a few global as well. Taking it from them and then supplying it to the clients as per the client's requirements. However, now we have grown into a CDMO model where we also set up processes and we hope to automate the manufacturing business for pharmaceutical companies. Next, please. A quick chronology about our company. We were established in 1988. We were previously known as Roxy. A lot of you who might have followed our journey right from the beginning, which is 37, 38 odd years ago. We were previously known as Roxy. In 1996 is when we were established on the Ahmedabad Stock Exchange for the first time. That is when we were listed for the first time. Shortly after, maybe almost a decade later, we were listed on BSE as well, limited though, and limited through direct listing. In 2018 is when actually things changed for us, without even knowing that the pandemic is actually going to be the icing on the cake. We changed the management through a share purchase agreement, and in 2019, immediately the year after, is when there was a change of business, and the stated manufacturing and trading of aero water machines was included, known as aero water. In 2020, which is 5 years ago, there was another change of business, and we started trading of raw material and pharmaceutical products, APIs, intermediates, solvents, etc. And that has been pretty much the chronology since the establishment of the company since 1988. Next slide, please. Quickly mentioning some of our clients, we have a portfolio of about 25 to 30 clients who we work regularly with. These are just a few examples, domestically as well as internationally. In India, we work with Biocon, we work with SR Drugs, we work with Medic Dragon and Spark, and as another couple of companies in Hyderabad, Apex is our renowned client. Internationally, we work with Rupus Global, we work with Dr. Ashley's, and we have a few clients in UAE, Singapore, Hong Kong, and a few in the UK as well. Next. Ashish, all over to you. Ashish, I think you're on mute. You'll have to unmute yourself, please.
Good evening, everybody. I am Ashish Parkar, CFO of the company. This is the quick outlook of the P&L account over a period of 4 years. We started our journey of trading in pharmaceuticals since 2019. The graph is upward. We have crossed around 500 crores each year, except last year we did some bulk order of 3,500 crore, and this year we are also closing that same level of financial 22-23. The revenue split is around domestic is around 20, 80 to 90%, whereas the exports is around 10 to 20% year on year. We have the EBITDA in financial year to 21-22 as 1 crore 70 lakh. In financial year 23-24, where we executed the bulk order, it is 54 crore. And this 9 months in current year, it is 9 crore 50 lakhs. The PAT was around 1 crore in financial year 21-22. PAT for 23-24 was 32 crore, and this year is around This 9 months ended, it was 4 crore. Next slide, please. The equity we last year introduced, we issued bonus shares, and hence the equity was 42 crore last year. The debtors is around 700 crores as of last year, whereas the trade receivables are also of 900 crores. We do not have the fixed asset base, so plant and machinery and everything is not there. Fixed asset is very less. That is office equipment, computers, etc. Next slide, please. This is the graph of our sales projected sales done during last 3 years. 500 CR in 21-22, 510 CR in financial 2023, but 4,000 crore in 23-24, and this 9 months ended at 151 crore. EBITDA also you see as 1 crore 70 lakhs, 7 crore 47 lakhs, 54 crore in 23-24, and 9 crore 50 lakh this year. PAT also 107 in 21-22. FY 22-23 we see 5 crore. FY 23-24 was 32 crore, and 9 months ended 25-24 is 4 crore. Next, please. This is quarter and quarter sales revenues, mostly covering over the some bulk orders in last 2 quarters of 24. December we saw 1,800 crores, as well as in March 24 we saw 1,400 crore worth orders executed, which were part of the bulk orders. So you see the PAT as well, increase in PAT, decrease in PAT of March was only because of the provision of income tax not in December 23 PAT was corrected in March 24. So that shows the dip. Next, please. These are the key highlights. That is the revenue, EBITDA, as well as your PAT, and in the graph ways. Yeah, over to the other sir.
Thank you, Ashish. So we have opened a rights issue, which is opening tomorrow for 15 days thereafter. For every equity share of rupee one, face value of one is so 61 shares of every basically 50 share held on record date. This is open for existing shareholders as well as new shareholders. Like I mentioned, the issue is opening tomorrow, which is 30th April of this year, and it will be closed 15 days thereafter on May 14th, 2025. A quarterly PAT has already been mentioned by Ashish. Thank you for that. We are hoping for this as a working capital, and I'll quickly shed some light on how we are hoping to use the 49 crores. 20 crore is going to be for R&D. We are hoping to develop new research teams and also utilize the data R&D data to kind of upgrade and be up to the mark about what's going to happen in the pharma industry over the next few years and what kind of solvents and intermediates we might have to invest into. Apart from that, we are going to be investing in machinery for that R&D, about 10 to 12, maybe 15 odd machines that has already been recognized by our popular doctors, Dr. Balakrishnan and Lokande sir. So both of them have worked very hard and have also identified about 9 to 10 machines that we will be using for this R&D facility, and the remaining 4 crores will be for admin and logistics. So that's about the rights issue. That's opening tomorrow. Next slide, please. A quick overview about what makes us different from any other player in the market, internationally as well as domestically. Our existing relationships with companies is basically getting us repeated business, and these long-term partnerships is basically the secret behind our strong base. Our commitment to quality standards has been impeccable. Some even call it perfect, and I'm actually grateful for such clients. But we are getting there. To be very humble, we are getting there. While some of them find us extremely flawless with our QC, we are still learning from the best, and we are still using the best resources in the industry, especially the best doctors we have, to make sure that the QC is at the optimum. In our business, supplying on a really large scale to other pharmaceutical giants on a B2B business requires QC to be in the main part of the business, or on the forefront. That is actually the last step, but also the most important step, which kind of defines the quality of what is being supplied to our client. And having said that, our scalable growth is actually focused on the markets domestically as well as internationally that I've mentioned. We're also setting up a subsidiary in Singapore. We've actually already done that, and we want to be a part of the biggest fintech as well as the IT hub of the world, and Singapore is that place. So we are hoping to work. We are hoping to initially find and recruit and work with some of the best researchers, medical researchers, who are already residents of Singapore. And our growth potential is probably going to increase by around 700%, is what we're hoping for over the next year or two. And yeah, our PAT has grown tremendously over the last few years for us to be confident about the years ahead. Next, please. That's
Thank
it.
you, Adu. Thank you, Adu. We will start with the Q&A session. I request all the participants to post your questions in the comment box. Thank you. So we have first question from Aditi Menon. Please explain your business model for both vertical supply chain management and contract manufacturing.
Sure. So, vertical supply, like the name suggests, actually follows a very linear process, right? We have one hand to take from. Maybe stock is the middle point, and then supply. So that is more or less very simple to understand. It is a part of trading. It is a part, probably the oldest system of buying from one and selling to another. However, contract manufacturing is much more complex than that. The part of supply chain management is just a part of it. So it has to involve strategy on what kind of pharmaceutical products you want to get into, and then get into R&D for that, and then also get into R&D to probably position it at a price point, use raw materials that help you position it at a price point which are lower than the competitors, so that you can supply them and also have retailers pick them up on a wholesale rate, and kind of run that as a supply chain management for several years ahead. So it's a process. It's a process of what you want to do, how are you going to do it, what are the resources you will need to execute that, how are you going to execute that, what machinery, what plants, what location, everything is going to be a part of how are you going to execute it, and then finally you will supply. So it's a longer process. So contract manufacturing is basically using supply chain management as a part of everything else that comes with it, from initiation as strategy, and then execution and supply chain management being the last step of that process.
Okay. Next question, please. Next question, please.
Ashish can correct me if I'm wrong, but I think domestically it's more 65 to 68%, maybe 70, and globally it's around 25 to 30%. So that's where we stand as of now. When it comes to our top five clients, they are domestic, and we would say 70% is what we get from them, uh, from our top five clients as our overall revenue. Ashish, am I right about that?
Yes, sir, you are right. Major
And
five clients contribute around 60% of our sales right now. So that will change from the CDMO setup now onwards. That is our main focus going ahead.
Okay, next question, please. Ananya Swaminathan, what are the terms and structure of contract manufacturing agreements entered into pharmaceutical companies?
great question, yeah. I really like the question, Ananya. We have some pharma geeks on this call, and I was not expecting such technical questions, but I love them. I'm actually quite happy to have answer such questions because this is where my expertise lies, and our team is more than happy to answer questions about technicalities and processes. So to explain CDMO as a model, we'll have to focus on two main things. It's actually a process that is divided into two parts. Okay, just give me a minute. I'll open some notes so that I don't make mistakes, right? Because this is about shedding light on the newest formula of success for us, which is CDM. Just give me a second, please. Yeah, I'm back. So, contract distribution is not something that focuses firstly on one client. You have to understand, like I said, let's simplify this for the layman. Okay, you have to focus on what industry you're gonna get into, including within pharma. Are you going to supply something only off the desk like paracetamols or medicines for cold and coughs, or are you going to focus on severe diseases, critical diseases like cardiac arrest, or probably say diabetes, or even Alzheimer's. So, are you going to be using pharma as a strategy to take care of daily problems? Because the margin in that is minuscule. It will always be minuscule. Off the counter medicines are going to be very easily available. So to simplify, before getting into what CDMO is, the company will need to decide whether they want to be a small player or a large player. Sometimes you can be an all-rounder, but that is like being a large player only, along with being a small player. Basically, you will sell everything from a paracetamol to heart disease, everything, from anything to everything in pharma. So India's CDMO market is expected to double around 14 billion by 2028 because the offering is so significant uh, that Remedium as a company is positioning itself to tap into this opportunity, this first mover's advantage. And that is why we want to invest into R&D. That is why the rights issue, that is why the 50 crores to invest in R&D, quality infrastructure, strategic relationship with newer clients, basically expanding our global potential clients. So we're hoping to focus on CDMO being the star. Honestly, for us, for the next couple of years, CDMO is going to be something which we will focus on. We see a shift, honestly, from trading to CDMO with 50 to 60% probably in India. So as a new business model, which kind of brings you 5 to 7 net profit margins, which is double or maybe 2.5 or 3 times more than your usual trading business. The trade what we were in before, we were working with margins of 2 to 2.5, maybe 3% max, right? But now it's going to be 5 to 7%. So with CDMO coming in, we are actually going to be focusing on doubling the uh, net margins and hopefully our revenue as well. So that is what we are focusing on. While large CDMO focuses on probably 20 odd, pharma clients who are the biggest ones, the biggest giants, the $1 billion, drug companies. Remedium is not focusing on that. Remedium is focusing on mid-size pharma firms. The regional innovators, the biotech startups, the mid-size pharma firms who are working on probably innovating something or other, creating something really groundbreaking, which will affect the pharma industry. We all saw how a pandemic and how a COVID shield changed everything. Imagine the kind of investment and execution when it comes to supply a Covishield would have done during that time. So anything can happen. A new disease or a new drug for an old disease or a new drug for a new disease is where the ecosphere of potential lies. And that is where CDMO is extremely essential for understanding what lies ahead and what can happen, and also be prepared for it when it happens. ऐसा नहीं कि there's another pandemic, hopefully not, God forbid, but there's another pandemic and nobody has any idea on what to do as medication. So CDMO is the future and it will definitely open doors for a lot of companies in pharmaceutical in the pharmaceutical industry, especially India.
Okay. Next question, please. Chaitali Dev. Who are the key clients of the company and what is the typical customer profile?
So, like I already mentioned in the presentation, some of our key clients are SD, we have Medic Dragon, we have Apex in India, we have Rupus Global, we have Dr. Ashley's as global clients. We have about a portfolio of 25 clients. We've also mentioned them on our website. You can go and check it. You're always welcome. But yeah, as the top five, top six clients, I've already mentioned them on the presentation, and I've re-mentioned them right now.
Okay. Next question, please.
Sure.
Next question. Can we have the next question, please? Hardeep Bedi. As a leading player in supply chain management, which segments or customer profiles does the company primarily serve?
So, like I already mentioned just a minute ago, we are focusing on mid-size pharmas. We're focusing on new biotech startups. We are focusing on people who want to make a change. We are focusing on people who have an idea on how they can create a path-breaking story as well as contribute to changing the world in some way. I know this is sounding extremely ambitious right now, but we have to zero down or refine on the ones who want to change the game. The game changers are the ones we want to focus on, and they are not the pharmaceutical giants. While they might have a very strong and a very expensive R&D team, not necessarily they are all focusing on some critical diseases that don't have a cure yet.
Okay. Next question. Arundhati, could you provide a breakdown of domestic versus export revenues? Which area is expected to be focused for future growth?
Sure. Can I please request my CFO to answer this? Ashish?
Yes, so I will answer these questions. Domestic sales is around 60-70% of the sales value, and 20 to 30% is the exports of our sales. And the future growth, future focus will be on domestic supplies, and we are also looking for the international customers. But the main object of the CDMO setup is to cater the domestic customers morely.
Okay. Next question, please. Neeraj, what strategies has the company implemented to manage risk arising from currency fluctuations?
Okay. Uh, First of all, we are doing the imports as well as the exports in dollars. So the prices are fixed in USD and not INR. So there is a natural hedge. So whenever we are buying or whenever we are selling, we are keeping our margin on the as per the US dollars. So pricing is always US dollars, not the INR.
I'd like to
Next
quickly
question.
add on that, if that's
Yes.
okay. Sure. So we are not chasing scale. Let's not misunderstand this at all. I've held a few meetings internally, externally as well. I've kind of come across a point where I feel people think we are chasing scale. No, we are not chasing scale. Even if we are, please understand, we're not chasing scale for its own scale, for its own sake. कि बड़ा है स्केल करना है तो स्केल करना है नो we want to be the go-to partner for companies needing deep technical support, who need agility, who need trust, who need probably the right guidance and the right equipment as per that guidance. So the rights issue coming in as the foundation, like I told you, the 49 crores, and then the next 2 years is all about the execution for that.
Next question. Ojas Badani, what is the current client acquisition strategy and how many new clients were onboarded during financial year 25?
So I already mentioned Singapore to expand our base globally. We are already talking to a few companies internationally, mostly in Europe and US, because those two countries or those two regions are untapped or have been untapped. So we are focusing on getting some crawlers there. We have a research team who's looking for companies on platforms like LinkedIn, even Google, and kind of getting in touch with some decision makers there. Obviously, after introducing us, so it's a slow process, and we have just begun. But that is what the strategy is on a basic level. On a strategic level, or on higher foot forward, a stronger aggressive foot forward, we have included CDMO as our core offerings. And I know I keep coming back to this, but this is our core main strategy. So that is another way to attract a lot more of clients that we never even spoke to. CDMO now being a new service altogether is opening doors for us to companies who are looking for CDMO as a service. We were never a part of that pool. Now we are a part of that pool. Apart from that, if you want some numbers, how many clients did we onboard last year, Ashish? Just as an estimate.
Around 8 to 10 clients were added this year. like Sanjay Chemicals, Parking, Sudarshan Pharma, SR Drugs. So
I think
these are
eight
the
is a
usual.
good estimate. Eight to ten. Yeah, I agree with you. Yes. So to simplify this, 8 to 10 new clients have been onboarded during the last fiscal year.
Okay. Next question. Rahul Jain. What are the broader business expansion strategies such as client acquisition, market diversification, or strategic partnerships?
Sure. So, firstly, let's understand now. For the first time, I'm going to be talking about something which is not really positive about CDMO, but every coin has two sides. Okay. So, let's understand very clearly CDMO is not a risk free business. Absolutely NOT. No, there are risks. There are risks like client concentration, basically mitigated by targeting multiple mid-sized clients across regions can be quite a messy strategy. Some of the other risks involve compliance issues. There are regulatory compliances across different countries, and the documentation and the processes for those documentation are different for different countries. It's not an easy ball game. And then let's not forget the main working capital stress. The rights issue that we have, open doors with is giving us the buffer. But you have to understand it is still a buffer. It is still something that is aligning us. It's aligning us to the payment terms and delivery milestones. But it's not really changing tracks completely. It's not taking you to the moon overnight. It's not going to happen. The execution delays is another cherry on the cake, because let's understand, managing to choose projects that kind of go over 18 months, 24 months, sometimes even 36 months. 12 to 18 months is the average, but having that sort of manpower, strategy, infrastructure, room for error, maybe even some accidents, god forbid, but yes, is a complex process. So having said that, we are diversifying CDMO foot forward, but our core strategy remains being a supplier, and our core strategy as client acquisition has been the same: do great work, hope for the best word of mouth, and now we are hoping for some lead generation through very simple, mediums like social media or even direct mails through our clients. So we are keeping it tight, but we are reaching out. We are now taking that step forward as a company and reaching out and saying hello to companies out there.
Okay. Next question, please. Hardeep Bedi. Why have revenues and profitability declined in first 9 months? And what is the future outlook?
Ashish, you're on mute again, Ashish. Sorry, I'm so sorry. You'll have to unmute.
Hello, sorry. If you see our progress since last 3 4 years, we have constantly generated a revenue of around 500 CR top line, and again maintain a net profit of around 1%. This year, last year, you see a sudden jump due to the bulk order executed, and there was increase in PAT as well. This year, the domestic supplies are less, and we are changing from trading to CDMO model. So we are in talk with other customers also for this business. Whereas the in 9 months, we agree that the sales was only 140 crore till in 9 months, and this last quarter we have sufficiently done our business, so that results will be updated next month only. So the top line is maintained for last, as per the last.
Okay. Can we move forward to the next question? Ananda Mittal. Are there any plans by the promoters to increase their shareholding to enhance alignment with public shareholders?
I I I highly doubt it, but it's tentative. But I would not think that's going to be probable. No.
Okay. Next question. Yash Mistry. Could management outline the current working capital cycle and any expected changes going forward?
Yes, sir. Currently, the working capital cycle is 90 days, and with the CDMO setup, that may change, and that's why the working capital is required. So this working capital cycle will may increase because inventory may be stock. The processes will be slow with the analysis, with the approvals of the customer, testings, everything.
Okay. Others, sir, would you like to add something?
Yeah. So Ashish greatly mentioned that. I appreciate that. We are going to expect a lapse, or rather an extension on the delivery period. Having said that, uh, after probably getting used to CDMO, we are hoping to lock it at 120. So let's hope for the best, but that's a call of our internal teams. I'm just a spokesperson for them as well, but I can assure you that as a focused company, and a company which is highly focused on CDMO right now, that too as our strongest suit, we are focusing on 120 being the mark for us, at least during the next fiscal year, if not this one.
Okay. Next question is from Arav Banerjee. What is the proposed investment plan for enhancing the company's quality control facility?
So I already mentioned how we are going to use the 49 crores for R&D and D and machinery and probably some logistics, and that is our strongest foot forward. Um, we are going to share um, details about all the machines publicly. Um, in fact, we want to do that so that our shareholders as well as uh, potential shareholders actually have the details about what we are investing into. So there are about 10 to 15 odd machines, which will which will take up half or maybe slightly more than half of the rights issue. 25 crores is my estimate, just an estimate, and 20 crores will be spent to kind of R&D the existing machinery that we have shortlisted, um, kind of quarantine or quality control any discrepancies or failures with the 8, 10 machines or 12 machines that we've already shortlisted, and then also focus on the next 10 as being the next 10 to 12 shortlisted machines that we want to invest into. So that is the plan.
Okay. Next question. Shantanu. How is the Singapore subsidiary expected to contribute to company's future growth strategy?
Sure, I'll take that. So we are using Singapore as a tech supporting base as an IP gateway. We are basically okay. Just to simplify, सिंगापुर हमको नए आइडियाज देगा, and those new IPs are going to help us create some path breaking successes. So we are using Singapore as our most strategic and most positive move to maintain asset light execution with strong control over quality, documentation, and public land management. So basically, Singapore is basically our strongest foot forward for R&D and new IPs. That's what Singapore is for us. It's a golden rules.
Okay. Next question, please. Arjun Verma, what is the total investment made in Singapore subsidiary and what is the ownership structure?
Ashish,
Okay, I will just answer. Right now, the total investment made is only 10,000 SGD, and we propose 2 million USD investment in Singapore this year, as well as the ownership is 100% of the Remedium Lifecare Limited. It is wholly owned subsidiary of Remedium Lifecare Limited.
Okay. Next question. Anandi Mittal. How do payment terms differ across the supply chain management and contract manufacturing business?
it's Ashish. Correct me if I'm wrong, please. Okay. Um, like we've already mentioned, the elephant in the room. Initially, 90 days, 90 to 120 days
Yes,
is
sir.
what we were working with, but now we'll have to work with 180 days or maybe slightly longer. But yeah, it is not going to be as short as 120 days anymore. That is the biggest drawback when it comes to payment terms. When it comes to CDMO, the payment terms are slightly longer when it comes to CDMO.
Okay. Next question. Devesh Purohit. What is the current level of client concentration risk and what measures are in place to mitigate this exposure?
Sure, I'll take that up. Just pulling up some numbers so I'm not wrong. Okay, so like I already mentioned, we are mitigated by targeting only the mid-sized clients across regions, across pharma, and not just pharma, but also therapeutic products. So let's understand that initially pharma was just one industry. Now we have a lot of therapeutic products, effervescent tablets, those Listerine sort of uh, mints. So now the industry has grown tremendously. So our client concentration risk remains on making sure that we are up to the mark with the trends when it comes to how the Gen Z and how the newer generations are choosing to medicate themselves.
Okay. Next question. Raj Gandhi. What revenue and profitability growth does management project over next 2 to 3 years?
We had that slide on the presentation, but do you want to pull that up again? Um, would that be possible? Can we go back to the presentation to that slide that Ashish presented?
Yes, sir.
Yes, yes.
If not,
Next
then
year,
we
next 2 3 years, we are planning around 60 70% increase in the top line, and whereby with CDMO model, we expect a good margin of net margins of 5 to 7% increase year on year.
if we can unhide slide 12, we can just show them that slide.
Yes, sir. Just give us few minutes. We actually.
Sure, please take your time. Not an issue. Let's just show them the slide 12.
So can you just tell us once again which type was it? You're on mute.
Sorry, I was saying this is the one, this is the right one. Ashish, all yours.
Yes, sir. We expect around 70, 80%, 50, 60, 70% increase in the revenue top line in next 2, 3 years, and the margin will be around 5 to 7% net increase in net margin.
Okay. Others are your own.
I'd suggest whoever asked that question can take a quick screenshot now if need be. I know there are a lot of numbers, but we've simplified them on one single sheet for you guys. We were expecting a question like this one, so we have put it together for you guys. Please go ahead and take a screenshot, or I think if there's a way to get this presentation, we
Yes,
shall
sir. We'll share the presentation with them.
perfect. So you will be having this presentation, but this is the slide that includes our performance over the last 3 fiscal years. Technically four, but yeah, the last three are crucial.
Yes, thank you. Next question. Harsha Joshi. All the best for the rights issue. Rahul Jain.
Thank you so
Best
much. Thank you
wishes.
so much. Thanks, Rahul. Thanks, Arsha. I really appreciate that. That was not a
I
question, that was good wishes. I really appreciate it. Thank you. Thank you so much.
Yes, I think we have covered majority of the questions. So thank you, Adarsh sir. Thank you, Ashish sir. And thank you, everyone.
Thank
And
you.
all the best for the rights issue. Thank you.
Thank you, everyone. Thanks a lot.
Thank you so much. Thank you, Vaishnavi. Thank you, Vaishnavi, for hosting this, and thank you so much for having us.
Welcome.
Bye. Have a great day. Have a great evening ahead.
Yes, same to you.